Good morning, ladies and gentlemen. Happy Monday. Hopefully, you've all had a great start to your weeks. This is going to be our daily cryptocurrency market update, and this is going to be an important one. There is lots happening this month, and actually, there's a lot happening on a kind of economic level this week. We've got the European Central Bank on Thursday coming out with a decision on interest rate hikes. We've got the Reserve Bank of Australia. I think that may be on Tuesday. And we also have the Bank of Canada that are all set to do pretty significant interest rate hikes. This, again, is important because it takes liquidity from the market. We showed this and we've been showing and talking about this concept of liquidity. It is really the driver of markets. We've shown you this with the M1 money supply and a number of other things. And we'll do it again just for anybody new to the channel. Really just to kick things off. Money goes up, assets go up in terms of supply. Money starts to sort of teeter off. Bitcoin puts in marginally higher highs. Also, the stock market does a similar thing. Money supply starts to reduce. You know the story. And also, we know that interest rate hikes very, very quickly. Just to get this out of the way, before we get into some pretty big news across the board, ladies and gentlemen, the dollar's making some absolutely killer moves today. And I think it's going to be a bit of a down day for the cryptocurrency market. That's my overall bias for today. You guys know that we think we're bearish over the short term, nothing but bullish over the long term. But talking about interest rate hikes, as we mentioned, the Bank of Canada, the Bank of Australia, and the European Central Bank. And then next week, we've got the UK doing a similar thing. And then the week following that, we've got the US, which is going to be the big shocker. This is the 30-day Fed fund rate. Let's pop Bitcoin on top of this because we know that macro is driving the story. Fundamentals do not matter in a market like this. What matters is buyers and sellers, basic supply and demand. Often the price of a stock, the market price, will not represent the underlying asset. You know, it's very interesting. There's a huge disconnect between markets and the actual assets that they're trying to price. You know, it's a speculative game essentially. So we know that this is going to be a significant week. We're already seeing a bit of a down day for the cryptocurrency market. That is quite likely on the back end of the dollar that we've said is going to continue. It's going to have various rests, but today it seems to be on a bit of a journey. It did get to 110 this morning. I think this is either a fake out and we're going to see a sharp drop as the day progresses and the risk on asset classes are going to do all right, or it's going to be a real painful day. And my bet is on the fact that it's probably going to be quite a painful day. The Asian markets opened up mixed. You know, we've got the Hang Seng Index, which is down, although the Nifty 50 is marginally up. The UK market is not really doing a lot, kind of undecided. And I would expect a bit of a roll across the board, really, with the US dollar getting a bid. You know, the US dollar and the euro is really the big story here. This is the pound sterling. And of course, this is the euro. So essentially, a dollar is worth more than a euro now. And I don't think the pound is actually still far off, but not too far off. Do we see a dollar and a pound becoming similar? All depends on the Fed and what they choose to do. And again, why are we mentioning this? Why are we spending so much time on this on a daily basis? Because markets are just driven from liquidity, money going in and out. And you have a real liquidity crunch going on. You can see here, and we've shown this a few times now, global liquidity in the form of fiat, in the form of reserves. And then you have all wealth, including gold and housing. You can see just the correlation here, guys. So it's no coincidence that things are selling off as liquidity is becoming scarce. And so many big YouTubers miss this because they've got their blinkers on and are very crypto focused. Once we've got through the news, we're going to dive into Bitcoin, look at some technicals. Said for a while now, Bitcoin to me looks weak here. Maybe you get a bit of a rally. I think you're putting in a head and shoulders that you're going to see that downside off of. We don't want to be buying anything under the 30-week moving average. This is still, for all intensive purposes, looking at the RSI, a very much intact downtrend. I don't know where people are looking for this deviation. Maybe if Bitcoin comes down and puts in a new low, let's say 16K, and your RSI does something like this, then we've got reason to be a little bit more bullish than we currently are. But we're not seeing that yet. This is still a very much intact downtrend. Let's get into a little bit of the news. As 10,000 long dormant Bitcoins finally trade, observers wonder what's up. Blockchain data shows 10,000 BTC, more than $200 million were moved in 2 transactions in the last week. We're seeing lots of whales actually look to move their crypto. Doesn't mean that they sell it, just means that they've moved it, and this always has people scared. I think the big one, and I've always said this is a real threat to Bitcoin and its price, is what happens if Satoshi's wallet, we know where Satoshi's wallet is, and we can see it publicly. What happens if that starts to move? That would be a huge, and I think that would cause panic and a real capitulation. I don't think we've seen capitulation for the cryptocurrency market yet. To me, this is very much a textbook downtrend and a structured one. It's not capitulation. Remember in May 21, that was capitulation. We've not actually seen that yet for the cryptocurrency market. And I think it has a lot to do with the stock market. Stock market just very, very quickly is having a bit of a bad time. This could continue. And if you break this low, I then think that the kind of panic is really going to set in. You guys know my overall biases that we're in a sort of 2008, 2000, or prior to that, 1998 style environment, or 1989, I should say, style environment, a recessionary environment that is going to lead to lower prices across the board. When you look at your everyday individual, things do not look good. You know, I'm hearing consistently and every single day, they seem to be snowballing closures in regards to SMEs, small to medium enterprises. And this, I think, is going to continue and actually get worse and accelerate into the winter. Talking about the euro and the dollar, the euro slides below 0.99 after Russia halts gas supplies to Europe. So things get worse. And natural gas, you've got Europe talking up a very, very tough talk right now against Russia. What can they do realistically? They are at the total behest of Russian supplies in terms of energy. And that's been the case for a long, long time. They were warned about it years ago and they persisted, and they're going, oh, well, if he does this, we're going to do this. And it's like, you don't have the upper hand here whatsoever. You're just talking tough. And we actually saw essentially oil, or not oil, natural gas, see quite a significant sell-off, and now it's straight back up just because of this news. And this is really, the euro's weak for a number of reasons. The ECB's mandate, I think, essentially is going to fail in the long run. I don't think it's good to just take all nations and just tarnish them with one brush and not look at them specifically. But essentially, you know, this is a lot of why we're seeing this dollar strength. And could this be a fake out? Potentially. You know, you can see the FTSE's getting a bit of the bid. The dollar's actually coming back down. The question is, what does it do for the rest of the days? It's taking a bit of a break here. We will see. It'll be sort of getting a bit of a boost also on the back of the non-farm payroll. Economists are divided on the risk of a US recession, and the job report data isn't helping. So the job report data, why was that bearish for markets? Why wasn't that bullish, showing that we've got a strong labour force and thus that's a kind of representation of the economy that we're in? Well, the reason being is because it really backs Powell up. Powell's coming out and speaking on Friday, I believe, with Brainard, and they're essentially going to talk about how the data, the non-farm payroll data that we got, has impacted their decisions moving forward. Likely it's going to make them more hawkish. Crypto crooks push Musk XRP scam in a weekend hacking spree. So this was actually to do with the South Korean government YouTube channel that was essentially hacked, and they were pushing SpaceX and XRP with a Ripple Labs phony website, essentially telling people to send their XRP to it. Please, I'm absolutely pleading with every single one of you right now, do not send your crypto to anybody in the promise of getting more crypto back. It's not how things work. It never has been that way. Maybe in the early days, we're talking 2014 prior, that's how things worked. But nowadays, it's a very different environment, and just don't send your crypto to anyone and don't share any of your private keys. That is a sure way to lose your money. We got the US Congress and crypto skeptics explain why crypto ban won't work. They are not going to ban crypto in the US. They're just going to regulate it. How do we know this? Well, why would BlackRock, JP Morgan, you know, Wells Fargo, why would all these players be getting involved in the crypto space if they thought there was even a significant or slight possibility of the cryptocurrency market and blockchain becoming a banned technology? It's not going to. You've got your big players positioning themselves, ready to capitalize on the growth of this industry. And that's all still to come. We've just got to ride out, and we're very, very bullish long term. We've just got to ride out a little bit more downside, a harsh winter, and then I think we will see brighter days eventually. This was some significant news. Saudi Arabia Central Bank hires crypto chief to boost digital ambitions. So the world is moving crypto, and we've always said this. You're going to use cryptocurrencies and blockchain unknowingly into the future, just like how we're talking over or on a PC via the internet, you know, and we have electricity, so on and so forth. All these kind of revolutions, blockchain is very similar. And in actual fact, in Wells Fargo's article, they had actually compared blockchain to the likes of electricity, the railroad industry, the motoring industry, and a number of other things, which is something we've been singing that tune for a long time. Let's look at Bitcoin. Well, this is, like I say, a very much intact downtrend, and we are still bearish. And people go, okay, well, how is this not a crash? It is a crash of sorts, but it's not a crash, and a capitulation event like I think we're potentially going to see. You know, we spoke about the yield curve yesterday. Please go and watch that video. I updated all my Patreons on it and got into a lot more detail. Anybody that's interested in joining my Patreon, there's a link in the description. Check it out first. You can join for a month. If it's not for you, you know, you don't have to join again. You can cancel your subscription. But this is essentially what I'm looking at now, this grind line and a failing of it. And I do think it's quite plausible. I don't actually like using Binance anymore because their volume is just so skewed by their kind of free Bitcoin spot trading. But this is really what I'm looking at, you know, and I actually think that what you're actually looking at here is a complex head and shoulders pattern, and you want to pray, if you're long Bitcoin, that this is not your right shoulder. That would be pathetic. Even I am expecting some sort of a return, possibly into this area here, before you get that further downside. Doesn't have to happen. We're on alert for this break, some sort of a retest to try and shake people out. But ultimately, you know, this is just weak as hell. We are trading this currently. I'll let you guys guess what side you think I'm on, whether I'm short or long. But this is what we're looking at. You know, we've been playing this move perfectly. You had your rising wedge. You had your broadening structure that we broke. We've been keeping up to date on a daily basis on this channel on it all. It's all come to fruition. And all those YouTubers out there that are calling for the new bull market, they're missing this very, very important concept that liquidity is king. And when you don't have the liquidity to put into markets, markets often don't even need a reason to sell off. They'll fall on their own weight. You know, talking about the M1 money supply, please go and look at it and look at the correlation. Don't just apply it to Bitcoin, apply it to the NASDAQ and all your other sort of assets. You'll see that it's just as correlated. So this is what we're looking at. Calling for this as a head and shoulders, and we're going to look for that downside. Go and give me a follow on Twitter because I will do an update on this technically. So yeah, more downside coming. It's just a matter of time. Can you pump in the meantime? Absolutely you can. But resistance is futile given the environment that we are going into. Will the cryptocurrency market see brighter days? There is no doubt in my mind. Will we get back to all-time highs? Bitcoin's going to 100K eventually, guys, and beyond. It's just going to take some time. And you have to be able to be well-dressed or appropriately dressed in whatever weather it is outside. So right now it's raining. Make sure you got your Mac and your umbrella. Summertime will come around again when you can all be in sandals and shorts. All I've got for you in this video, guys, if you enjoyed the content, like is always appreciated. So is a comment, and I look forward to seeing each and every one of you in the next YouTube video. Have a wonderful Monday, guys. Catch you all in the next one.